But I do think there's still downside to go in crypto, and you can see the bear flag on the monthly chart. So midterm, I still think you have downside to 12, 13,000, maybe sub. But I do think when the Fed really gets in that tight spot and you see rates begin to come down and the Fed pivoting and potentially things getting bad enough in the economy, both globally and domestically, that's where Bitcoin could actually put in a bottom and start performing along with gold. So I think the key is to recognize that right now, the near term, which we're not going to focus on, very volatile, bear market, we're going to get bounces. But the question is, how low does this bear market go for equities as well as Bitcoin? And then can gold actually turn it around and really start to rip higher? And I think the answer is that the equity markets and Bitcoin still have downside. So what I'm going to do, we're going to look at like longer term charts. We're not going to look at daily charts. We're going to go to bigger time frames. When you go to bigger time frames, you tend to see bigger things. So let's start on the S&P here by going to the SPY, and we're going to go to the monthly chart. And the first thing that jumps out to me on this monthly chart is the bull run that basically was nonstop from 2009. Now, remember this, right? What started in 2009? And the answer is quantitative easing. And so you really have to look at even the dot-com bubble. I mean, it was sharp to the upside, but it wasn't that crazy compared to this run here. And so what that does is that makes me very nervous that we've pulled forward so much of our gains over the mid and long term that the markets are going to have significant further downside. In fact, if we're talking worst case scenarios on these spiders, the S&P 500, I think this is a worst case scenario, you could find yourself back to retest the double top high from 2000 and 2007. Now, that's a worst case scenario. If we're talking some other ideas here, this would be kind of my best case scenario, which is the connector from 2009 here, here, and here. And if we look at that, that's right around 300 on the SPY, which is right around the S&P 500 hitting 3,000. So you have a best case scenario long-term and a worst case scenario. Both cases are negative. S&P still has more downside to go mid to long term. Yeah, so I think it was about a 30, if I remember correctly, it was about a 30 to 35% drop, or about a 30% drop on the S&P from there to there. And then again, what's amazing about this is we recovered entirely within a couple months. Yeah. And so one of the things to keep in mind is that if you look historically at bear markets without Fed intervention, they last for a couple years. Like here, you had the S&P from 2000 all the way to 2002. That was the collapse. And then if you look at 2008 all the way to 2009, you talked about 18 months. So you really haven't had a bear market since 2009, even though you had a quick, sharp decline during COVID. No, for instance, in 2007, right, the highs to the lows of 2009, you're talking, I think it was about a 65% drop. Right. So much, much greater, about 2 times what we saw in terms of COVID. You're talking about, we got to basically 480 here, down to, let's say, 300. That would be about, it looks like that would be about a 35% S&P drop, I believe, maybe about a 40%. So it's getting closer, but it's not quite there yet in terms of the size and magnitude. Now, in all fairness, the 2008-2009 drop was bigger than what we saw in 2000 to 2004. This was a little bit of a less drop. But I think the bottom line is, what we have to remember is that the drop that we're going to see is probably going to be in the realm of this move combined, somewhere with the average of these two moves. So my guess is we got about 50% downside before the market can really solidify itself, which does put us here or maybe even lower. Oh, that's a good question. Let's take a look at the gold chart, right? So remember, during bear markets, the idea generally is that gold does well. And what you could see is that in 2000, gold bottomed out and actually did have a nice move up and even continued to run higher all the way into 2011. So, I mean, talk about a bull market. That was an incredibly strong bull market. We've then obviously had a little bit of a consolidation kind of. Really, what's interesting is this almost looks like a cup and handle pattern forming on gold as well. I do. And I think you've seen gold under pressure because rates have been going up, and that's caused, again, the Fed hawkishness has
Yeah.
caused the U.S. dollar to strengthen, which then puts pressure on gold. But the key is going to be the pivot, right? So when the Fed pivots and they are no longer raising rates, and in fact we get in such a dire economic scenario like a 2008 2009 where the Fed then has to actually start lowering rates, that's where the bull breakout on gold occurs. So you still could be talking about some choppy, maybe retest of the 2000-ish area for the next 6 to 12 months. But whenever the Fed starts to majorly pivot and drop rates, that's where I think the breakout on gold really starts to kick in. Yeah, so I think that is also going to be likely where crypto makes a bottom, right? So if we go to the Bitcoin chart here, and again, this is now looking at a really long view of crypto, but I do think there's still downside to go in crypto, and you can see the bear flag on the monthly chart. So midterm, I still think you have downside to 12, 13,000, maybe sub, but I do think when the Fed really gets in that tight spot and you see rates begin to come down and the Fed pivoting and potentially things getting bad enough in the economy, both globally and domestically, that's where Bitcoin could actually put in a bottom and start performing along with gold. And I really do believe that we're now in a protracted, like a long-term sideways chop period. And I think, I don't know if we talked about this last time, but it's a great, in terms of looking at the macro, it makes a lot of sense. But look at like the Brazilian stock market, right? So if you look at, what does this look like, Paul? See this run up from 2002 to 2008? Look
Hmm.
at that run in the Brazilian stock market and then compare it to what we just looked at on the monthly S&P chart. Look at this
Yeah.
bull run here, right? It's very identical. And then what scares me about the US equity markets, and listen, I'm a trader, so it doesn't really matter, but you have to look at what has it done since the 2008 high, and look at this. So you have not made a new high, not even close, on the Brazilian stock market since 2008. And now here we are 14 years later. And you could also say the same thing for the Hang Seng market, where, it's another good comparison to what period we could be coming into. This is the monthly Hang Seng chart. So you could see back in 08, 07, you were up here, and all you've done is go sideways with some big dips in there. And I do worry that that's the future. We're looking at a future chart of the S&P 500 here. Yeah, I think silver and gold are good to start to accumulate here. I'm a big bull on silver as well as gold. Maybe not quite as big a bull on silver
Yeah.
versus gold. I think I like gold a little bit better, mainly because gold does have that industrial side. So if we go into a global recession or even depression, the question is how much demand for silver is there in addition to the store of safety. But having said that, if inflation is here to stay at 4% for the next 5 years, let's say, or longer, if the markets aren't going to perform, people are going to finally say, all right, where can I park my money that is going to be safe and maybe at least get me some return? And I think silver looks good for that. So, I mean, I'm a bull on silver. I'm going to erase some of these lines so we can draw on some new lines here. These are just more on the intraday. But since we're looking at the longer time frame, I would say keep an eye on this chart right
Mm.
here on silver, and look at this. Look at
Mm.
these trend lines right here, right? So basically, we have a long consolidation pattern, and what we want to see is silver break above this line and break out, and then you could be headed back to $50. Now, listen, we haven't broken out yet, but ultimately, if we do, you got major upside. Yeah, so oil, my mid to long term, and midterm we'll call 6 months to a year out. I think by mid 2020 to late 2023, we're looking at sub $50 oil. And this goes to counter trend to what a lot of people have talked about. Everyone was saying, oh, it was going to go to 150, then 200. But what people aren't getting, and this is what drove me nuts back when we were at 130 after the Russia invasion, is that the loss of demand, the shrinking global economy, the amount of barrels that won't be consumed by recessions is way, way bigger than the amount that Russia's not selling, even though they're still selling it to China. But even just the OPEC cuts, I mean, we are talking about a massive reduction in demand globally for oil, and therefore oil is going to continue to go lower. I mean, sure, you'll get your bounces, but I see oil going quite a bit lower by 2020. Let's take a look. Let's take a look at Cardano here. So this is the weekly Cardano chart. So this isn't going to tell us what that's going to do in the next couple days. Oh. The weekly Cardano chart continues to be a concern, and I'll show you why here. And again, I like Cardano, but the chart is the chart, right? The chart is my master, essentially. And it bothers me a little bit. You can see this support here, pivot, and right through here. And look, we're starting to peak below that trend line. And so that's a concern. If it doesn't get above soon, Cardano could have another leg lower. You could be looking. Yeah, it could basically, we're now on the weekly chart, so it has the rest of the week. So you basically got Wednesday, Thursday, Friday. I guess Saturday and Sunday technically for cryptos. But if you can't get back above here by, basically you want to get back to about 39 cents by Sunday night, then that's an issue. Then I think you see the bigger sell-off ensue.
What about XRP, for the XRP army out there?
Yeah, let's take a look at XRP here, right? So on XRP, and I got some trend lines here and stuff from previous analysis, but basically what we have is a breakout. So you can see the trend line here and the trend line down here created a wedge pattern. Very clearly we broke out. We've now then been putting in bullish consolidation again. As long as you stay within these two lines here, this is a bullish chart that should break up. If we start to get below here, then be careful. It could fail and could come down. So I would say, again, a little bit on the trickier side, but at least as of now, midterm would be bullish on XRP.
What do you think about the court case with the SEC? Do you have any views on that, or you just look at charts in this case?
Yeah, it's such a tricky thing. I mean, I'm a big fan of getting some rules down on paper, but in terms of this specific case, I don't have much of a guidance. I don't have a lot of research that I've done on what's going on, the inner workings of it. But I think the bottom line is, as an investor, I stay away from Ripple just because I don't know the outcome. Anytime I can't quantify, or if I don't feel like I have an edge in a trade, then I stay away from it. All right. So again, I think that's the key right now, is just, do you have insight into the analysis, or if not, stay away from it. Amazing. In fact, I want to show you guys some cool technicals on Quant, right? So basically, when you look at the Quant chart here, you had this beautiful inverse head and shoulders, right? Shoulder, head, and shoulder. And I'm going to show you a tactic that you can use to calculate the target of a breakout. How high will a inverse head and shoulder go? And I'm going to show you this. This is pretty remarkable stuff. So let's first start by drawing the head and the inverse head and shoulder. So shoulder, head, and shoulder right here, right? So there's our inverse head and shoulders, clear as day. Let's put the neckline in. Now, the way you calculate a target is very simple. What you do is you take the lowest point of the head and a vertical line to the neckline. This is called the neckline here. You take that distance, and when you break out, that distance should be how high you go on Quant. Well, let's do a test of that. The low here was around $40. The line, when you draw a vertical, was around $140. So now you have a $100 move to this line, which means when you broke out here, you should go $100 higher. Well, the breakout occurred at 125, which means at 225 was your target. Look at that. Look at that. Right to the target, and look at the pullback. So it's just some cool stuff, how we figure this stuff out in technicals. And you can see, again, for me, I'm not looking to buy this now because number one, I wish I saw this before. I would have shorted it there. But on a pullback, where would I be a buyer? I would look for a retrace to that line and then buy that line. If you could get a retrace to that line, high probability, long opportunity on Quant.